confirm you can hear me, please. Kindly confirm you can hear me.
Confirm you can hear me, please.
Okay, good, awesome. All right.
Kindly confirm you can.
But this did not happen earlier now. So welcome back, right? I was trying to um
So welcome back, right?
keep up to speed with a couple of things we've been doing before now. So I'm going to taking us on model 1, model 2, model 3, and then before I come back to model 4, because we have been doing a couple of models before now. We did all the models open, right? So thank you all for joining. We really appreciate that you're on the live session. The course we've been taking is building an investable trading plan for lasting success. And the course is generally for beginner traders who want to start the right way with a professional mindset from the first day they are talking about trading. And this course is also for intermediate traders who are stuck in inconsistency and are ready to build a real track record. And also for advanced traders who are preparing to attract investors or manage larger capital. Right. So this course actually is not your regular trading strategy course. It's an institutional playbook for designing a trading plan that investors trust. Also, it's a playbook, right, for developing repeatable processes, right? Not just luck-based trading. Right. Also, it's also for building the discipline and transparency required for long-term success. So for module one, we talked about the understanding the foundations of investable trading plans. And we talked about the purpose of an investable trading plan. And then we also talked about the difference between a trading journal and a trading plan. And then we also went to the key components of a sustainable trading plan. And then we moved also, we talked about the market selection, the risk management, defining your edge, what makes you profitable as a trader. We also talked about discipline and transparency, which is how to build investors' trust. And then we came about the case study from losing gambler to funded trader, right? That was module one. And then I'm going to do a quick recap on module two. Module two was building the core structure of your plan. Now, under module two, we had setting goals that attract capital. Then we talked about the hedge fund risk management framework. And then we talked about defining your edge in one sentence. And then we talked about the part-time trader who attracted $100,000, right? Through all of this. And then we moved to module three, where we talked about designing a professional trading blueprint. Now, in module three, we talked about how to structure your trading plan for investors. We also talked about investors' red flags to avoid, right? These are things that investors do not like when you, as a trader, are presenting a template to them. We also talked about the tools and platforms in which we use in enhancing our trading plan, and you also can use them in enhancing your trading plan also. We also talked about how to align your plan with market trends, and then we talked about a case study. Now, one beautiful thing about this course is because for every of the modules, we have a case study. Yeah, we have a case study. So for module three, we talked about the crypto trader who pivoted, right, to keep investors. Now, what were the challenges? The challenges were exchange crackdown, which made sports trading unreliable, right? And it was able to switch. Now, being able to adapt to the things going on in the system. And today we are talking about mastering the presentation to investors. That's what we're talking about today. Mastering mastering the presentation to investors. And what is this about? This is about how to confidently pitch your business to investor, right? How to confidently pitch your trading business to investors. That's what we are talking about today. How to pitch your trading business to investors. And it's so beautiful to have everyone here because it's great that we have the privilege to share this to the general public. And before we go forward, I want to thank FX Professor and the whole of Forexlyfe and everyone on this call for the privilege to present this to you all. We're going to move briefly into the slide we're going to be using for this presentation. Yes. So please, if you can hear me well and you're following, kindly indicate in the chat box. Let me know that we are all together. So, how to pitch your trading plan like a hedge fund pro. That's what we're talking about today. How to pitch your trading plan like an hedge fund. Now, there are three keys to a winning pitch. The first is clarity, The second is proof. The third is your storytelling ability. Right. So your trading plan is complete when you are able to master the presentation act. In this model, we will be helping you become a compelling storyteller who can structure pitches that hook investors in 90 seconds and also handle objectives about risk and returns. And then help you also turn feedback into funding abilities and opportunities. And then by the end of this module, we want to assure you that you'll be ready for investors' meetings with unshakable confidence. Right. So I'm moving into the three keys to winning a pitch: communicating, confidence, and expertise. The three act pitch formula, which is the first, the hook. Act one is the hook. Act two is the proof. Act three is the acts. Now, I'm going to take you through something briefly, right? So let's talk about the hook. Act one, which is the hook. We help accredited investors achieve consistently 8 to 12% annual returns without hedge fund fees. That's the hook. That is clear, direct, right? Very clear and direct to investors. This is what we help you do. And the next thing the investor wants to know is, okay, how? How can you do that? And then act two is the proof, which is you show your verified track records by having your MyFX book profile properly structured to do this. And then two, you explain your 135 risk framework. Now, for those of us that have been following us on this course from Module 1, you will understand what the 135 risk framework is. We said that you don't risk more than 1% of your account balance, right, of your trading capital per trade. You don't do more than 3% per day, and you don't do more than 5% per week. Now, with this 135 risk framework, there is no way you, as a profitable hedge fund manager or a trader, can blow an account. Right? So, the next thing is your Act 3, which is the ask. Now, you have clearly stated what you can do for the investors. You have stated the proof, which is how you can do that. And then the next you are moving on in is to the ask, which is let's schedule a follow-up to review our Q3 liquidity plan. Very, very straight and direct. Clear, you have your proof, and then you have your story. Now, your story is your ability to convince, right? Your story is your ability to convince the investors, right, that you can do this. How do you tell your story? You should own your proof. You have been a trader, you have been experienced, you have been profitable, you know the tactics you used. It is now left for you now to tell your story. Own the proof, own your clarity. That is how you develop a perfect and great storytelling technique. The second thing I'm going to be talking about, right, is the presentation essentials. Maintain eye contact. Keep your ends visible, because you don't want to give an impression to the investors you're trying to convince that you are not stable, that you don't know what you're talking about. Then the next thing is to pause after every key point. You take a break. You allow that key point sink into the investor, right? Let it sink into the investors. Let them take it in. You make a point. You make a hit point, and then you relax. Let them have a feel of it. Now, most traders fail because they gamble. My plan delivered 15% annual returns with strict risk controls. Let me show you how. This is one of the perfect hook used on the Wall Street to attract investors. Come off it. Most traders fail because they gamble. My plan has consistently delivered 50% annual returns with strict risk controls. Let me show you how. And then the next thing you come and say is, I use Fibonacci retracement with MACD divergence. I'm sorry, the investor doesn't know what Fibonacci retracement is. The investor doesn't know what MACD MACD divergence is. All the investor is interested in is hearing how you do that, which is your proof. I buy when the market is oversold and sell when it is overextended. It is that simple and straight. Because you are in a trading market and all you want to do is buy and sell. It's just very straight to the point. You need your proof, you need your storytelling system to be on point. And then you prove it with data. Now, if you can see on the screen, I don't know if all of us can see my screen clearly. We have a win rate of 68%, an average risk reward of 1 to 2.5, and then we have a maximum drawdown of 8%. That is how you prove it with data. Yeah, that's how you prove it with data. All you need to do is to have your facts in place. Okay, yeah, let me share that again. Let me share that screen again. I can see that a lot of us are not seeing it. Let me share that again. Okay, great, awesome. Okay, can you all see my screen? Can you see the slide? If you can see the slide, let me know in the session, in the comments. Right, I'm trying to get you guys to see something in the slide. Okay, beautiful. I'm glad you can all see the slide now, so we can proceed with the slide. Right, beautiful, awesome. Thank you. So if you see the screen, what is on the screen is prove it with data. Your win rate is 68%. Your average risk reward is 1:2.5%. Your maximum drawdown is 8%. Because people generally work with data. Your data is the proof that this is what I've been doing. And that's why a lot of times I advise a lot of people when you trade, even if you're trading a demo account, even if you're doing a prop firm account, try to get your trading data. It's very, very important. Right. So let's go. I have a question and answer table, right? Let's take, for example, you said all of these things that you have to say. You have a situation where investors have questions for you after making your presentations. What if the market changes? I'm going to give three different questions, right? What if market changes? Your track record is short. How do you handle losses? These are three questions I, as a fund manager, as a portfolio manager over the past 9, 10 years, I've encountered, right, in the industry as a whole. Now, if you look at the screen, there's a response there. So my 2020 backtest shows plus 22% during the COVID volatility. Now, this particular question answer did not answer That's why you can see that the table is in red. You need to be able to show your adaptation protocol. A lot of times, so many people do not trade on the week where you have various large news. That is your own adaptation protocol, right? Many people don't trade on Fridays when you on the first Fridays of every month when you have NFP. That is what you do when the market changes. Now, let me give an example. The other day, I was having a conversation with FX professor, and we were discussing something about the chart. Now, FX professor takes long trades. He holds trades for about 200 and something pips, 300 and something pips. But the moment Trump came in, that wasn't working well as it used to be because Donald Trump, being the new president of the United States, comes up every day with different policies and the rest of them that affect the movement of the market. Now, if you are following FX Professor on his different social media platforms, you will discover that FX. Okay, so welcome back again. Sir, we had a break of transmission, and I was trying to walk us through the risk framework. I was having a conversation with Prof the other time. I don't know if you can all hear me. If you can hear me, kindly let me know in the chat so that I can know that we are all together. Okay, beautiful. Thank you very much. I was having a conversation, and Prof told me that, oh, you know what? In a very long time, I don't think I've ever blown an account. And I said, oh, okay, how does that work? And I discovered that it has a proper risk framework, right? Which is how do you handle losses? And like I said, I gave you a very simple and easy way on how you handle losses, which is the 1-3-5. 1% per trade, 3% per day, 5% per week. And that is very simple and straight. So, which means that if you take 1% per trade, it will take you 100 trades at a stretch before you blow an account. I mean, and if you take 10 trades at a stretch and you lose 10 trades at a stretch, honestly, I feel like you need to go and reevaluate your strategy. Right. So, let me give you an example, right? A case study. The feel, felt, and found method. Acknowledge the investor's concern. Relate to others people experience and then provide your solution. So let me give you an example, right? A trader recently secured $100,000 in funding just by doing something very simple. He usually say, I rarely lose, I hardly lose, right? You heard a lot of traders say that, I hardly lose. No, my strategy is on point. My strategy is key. My strategy is okay. My strategy is this, right? All he needed to do is say, here is our 5% weekly loss limit. Now, that takes into consideration that, oh, yes, we are humans, right? Losses come in the market. There is no way you would say you don't lose. Losses come into the market. So that makes you feel, right? Acknowledge the concern of the investor. Do you understand now? It gives you a picture of what the investor has in their mind. How do you handle losses? Oh, we have a 5% weekly loss limit. Now, I'm going to take you back to something. One of the major reasons why, apart from the what you call it, the fraud that happened in the prop firm industry, right? One of the major reasons why a lot of us traders have issues with prop firms is our inability to have our risk framework, right? If you can implement the risk rule in prop firms in your personal account, trust me, it's only a matter of time you're going to become profitable. So, I mean, why would you as a Forex trader say, oh, I rarely lose? Or why would you as a trader, Forex, crypto, commodities, volatility indexes, stocks, ETFs, futures, whatever it is you trade, right? Why should you have a saying that I rarely lose? No. Yes, you can rarely lose, but in your presentation, you putting that is trying to make you sound like a robot to your investor, right? So you need to be able to have a feel, felt, and found method. So I call it the 3Fs method. Acknowledge the concern of the investor. Oh, yes, we understand that losses come in the Forex market, and I'm going to walk you through my risk framework. I have a 135 risk framework, which means I do not risk more than 1% of my trading capital per trade. I do not risk more than 3% of my trading capital per trade. I don't risk more than 5% of my trading capital per trade. So if we have 3% loss, right, in a day, if you have 3% loss in a day, that simply means that I'm out of the trade. I'm stopping to trade that day. I need to reevaluate what has happened. And if I lose more than 5% weekly loss, I'm not trading again that week. Do you understand what I'm saying now? It gives the investor the ability to trust you in everything they are doing. Now, I'm going to be moving next to leveraging feedback to refine your plan. If we are together and you are understanding what I'm saying, let me see you drop a fire in the chat, right? Let me see you comment in the chat, keep fire in the chat, right? In terms of leveraging feedback to refine your plan, there are different processes in doing that. Number one, the improvement process. Number two, investor relationship building. Right. Number two is very critical, but I'm going to come back to it. The first is the improvement process. Now, under the improvement process, you need to record all investors' questions. Even after you are done with your presentation, you need to record all the questions you were asked by the investor. Then you now categorize them. Is this question under risk? Is this question under return? Is this question under fund management? Is this question under capital protection? So by the time you do that, it helps you to be able to categorize what each investor is particular about. Some investors are particular about returns. Some investors are particular about risk. Some investors are particular about capital preservation. I've given you three things now: risk, returns, and capital preservation. Right? Risk, return, and capital preservation. Those are three very, very important aspects of the improvement process. Then you update your materials monthly, or you update it as often as you communicate with potential investors. Very, very important. Now, the second one is the investor relationship building. You need to be able to build, right? You need to be able to build a relationship with your investor or with your potential investor. Now, when I say update materials monthly, I simply means that you have your performance snapshot updated monthly, your market observation, your strategy adjustment. Then you have an open Q&A invitation. Now, imagine that you and your investors have question and answer sessions weekly or maybe once in a month, right? So at the end of every month, your investor can ask you questions. They can communicate with you. There's an open invitation for them to discuss with you. Imagine how the relationship is going to be. Imagine the bond between them. I'm going to take you through a case study for this model, right? I'm going to take you through a case study in this model where a trader moved from rejection to 40,000 US dollars and then to 250,000 US dollars in 30 days. Now, these are not all abstract traders. These are traders that we have built in the system over time, and we keep sharing experiences with them. Right. These are traders that have gone through the Forexlyfe, the Forexlyfe hybrid courses. These are traders that have gone through the psychological system of the Forexlyfe Academy. So we are bringing a lot of case studies from our insider system to make people understand that when you implement certain psychological facts into your trading approach, it's not just about strategy, right? It's about your ability to understand you having a trading plan, not just a trading journal. There are 1,000,001 trading journals outside there, but we can literally count people with the trading plan in the Forex industry. Now, let me give you what happened. I'm going to take you through the story of this person. The first pitch practically failed for this particular person. It's funny, right? Why? Because the person was only focused on returns. And unfortunately for him, his investors are not those that are interested in returns, right? We said something the other time. We have three types of investors: those that are interested in capital preservation, you have those that are interested in returns, and those that are interested in risk management. So he was pitching to an investment system or to investors that were interested in capital preservation. Whereas he was offering them returns. So there was no synergy, right? There was no synergy in the system. Why? Because they were not in sync. Their goals were opposite. He was pitching returns, right? And he and the investors were looking for capital preservation, right? So what did he do? He went back and added risk framework slides to his presentation. That was all. Because your risk framework slide shows how you can attend or how you can handle losses when they come. And it also proves to the investor how you can protect their capital properly. So all he needed to do was added a risk framework that reduced the focus only on returns, but also included risk management and capital preservation. And then he did that and then got access to 40,000, right? And then he kept going, get access to 40,000. He kept practicing mock pitches. You know, it was consistent. Let me use that word in everything he was doing. He kept practicing, he kept improving on his risk framework. And before you know it, within 30 days, he was able to secure up to 250,000 US dollars. And that's like higher funding. So it makes us understand that it's not always about returns. You could have portfolios from banks, from industries where it's not all about returns only, right? You would have risk management, you would have your capital protection, and then you now have returns as the last. So all of this has to do with hierarchy. There are three major ones, but for different investors, you have different scale of preference, right? Order of priority. For somebody like me, the number one priority on my risk framework is what? Capital preservation. Number two is risk management. Number three is what? Return on investment. Right? So all of these are very, very important in whatever you are doing as a trader that is looking to build an investable trading plan. And one thing you need to understand is every member of the Forexlyfe hybrid course, right, is not just learning to trade technical analysis, but they are learning to understand the basics of building an investable trading plan that is not just useful to them, but useful to portfolios that they are now beginning to manage. We have a lot of people in the Forexlyfe hybrid course system, right, that over the years have learned technical analysis and they have also learned psychology. And then they have now learned how to build an investable trading plan, and getting funding for them is now a walkover. There are a lot of courses out there. I understand. There are a lot of technical analysis out there. I understand. But if you listen to when I was bringing in this course, introducing this course, and doing a summary at the beginning, I told you one basic thing. The Forexlyfe hybrid course, which this particular course is a subsection under it, right, is for beginners traders who want to start trading the right way with a professional mindset from the first day. And also for intermediate traders who are stuck in inconsistency and are ready to build a real track record. Because it's not all about building a track record. Is your track record real? Can you defend your track record? Can you consistently defend your track record? A lot of times, we Nigerians practically have this attitude of being in competitions, and you hear people on the social media try to come and say, "Oh, if you know you are better than me, well, yeah, you fund $10,000. I'm going to fund $10,000. Whoever makes profit at the end of 1 week, that is the best forex trader in Nigeria." But that's not true. That doesn't make any sense. And why did I say that doesn't make any sense? Because 1 week does not define you as a trader. And I've said this to the insider system, and I'm going to say it. I know I might be dragged for this, but I honestly do not care. If you want to go in a competition with anybody, trust me, one of the things that you would recognize about Forexlyfe students is the fact that when they talk on social media, you know that the difference is clear, right? If you want to go in a competition with somebody, or you want to go into a competition with somebody like me and prove to me that you are the greatest and the best forex trader in Nigeria, I mean, you should be able to bring a track record of 5 years. You should be able to give me in my FX book profile that conveniently shows your verified trading history for the past 5 years. That is how you define the best forex trader in Africa or in Nigeria or in the whole world, wherever you are competing for. But I mean, what is even the essence of the competition? Because I don't have your money, you don't have my money, you don't know what I manage, I don't know what you manage. So why is actually the competition? But the truth remains that for you to be consistent as an intermediate trader and not get stuck in inconsistency, you need to be ready to build a real track record, and you need to be very sincere with yourself. And also, this sub course under the Forexlyfe course, right, is for advanced traders who are preparing themselves to, first of all, attract investors or manage larger capital. Now, there's a problem in the industry where you have people who are trading with maybe $1,000 before or $2,000 before, right? And then they move to trading $10,000. They just get access to $10,000 and they are fidgeting. They do not know how to now handle this thing. They can't balance it. And why can't they balance it? Because they have not handled that kind of amount before, right? But that is not the case with Forexlyfe students, 100%. Why? Because we have been taking this course from module 1. And gradually, they now understand that this is not just right. This is not just this is not just a part of the forex system that comes with, oh, this is a different trading strategy. I'm going to give you 5 reasons why this is not your typical trading course, right? If you see online, you will hear it 100%. The Forexlyfe hybrid course is not your typical trading course. Because every other courses out there talks about, oh, buying and selling, fundamental technical analysis. But how many forex courses actually talked about your psychology, about your mental state in the forex market, about building an investable trading plan? I mean, if you can name one, I would really be interested in it. But this is where we have a course, right, where you don't just teach secret indicators. Oh, this course is teaching you a secret strategy, right? You hear some courses come about and say, oh, my secret strategy to how I made $10,000 in one day. I mean, it's laughable, but I don't know what to say, right? But we don't just do that here. We're not just teaching secret indicators. We focus on market structure and your psychology, right? We are not just here to show hypothetical examples. We use real case studies of funded traders from our insider system. Also, we don't leave risk management as an afterthought. I hear a lot of people say, oh, this particular thing no fee make you this strategy, right? If you keep doing this and keep doing this, you cannot buy a Lambo, or you cannot buy a Benz, or you cannot buy a G-Wag, or you cannot buy a BMW, right? I know. But first of all, can you check can you check and see that this is all you have, right? A lot of time we say, oh, forex is not for broke people. Yes, it's the truth. It's a painful truth. But I mean, come on, what will you do? What if it's only $100 you have, right? Would you leave risk management as an afterthought? No, we don't do that. We make risk control the foundation of your trading, right? A lot of other courses out there, they don't talk about investors' perspective. They just want you to be a trader, but you need to grow from being a trade to just a trader to a fund manager. Do you understand? Now, one thing you need to understand is this. We are not trying to tell you, oh, you must talk to investors. Do you know that you yourself, you are an investor in your life? In one of the models, I know I asked a couple of questions, and I asked a couple of people that how, if you are an investor, can you invest in yourself? And it was laughable because we had a lot of responses here and there and the rest of them. But I mean, over time, they've come to realize that even their money they can be fund managers for themselves. So, which simply means that this is not all about having to talk about investors. You can be the investor. Can you? I'm going to leave you with this question, right? Can you, as a trader, right, or anybody, let me use that word, in whatever you're doing, can you, as a trader or anything, be, right? Do you get the point? Manage your funds yourself. Can you give yourself money to trade, or can you invest in yourself and tell yourself, I am my fund manager? You get the point now. Can you do that? It's a rhetorical question. I'm not asking you to answer, but go back the whole of this week thinking about this. Right? Can you invest in yourself right now? So think of yourself as the investor and think of yourself as the fund manager. So our Forexlyfe hybrid course teaches you how to think like a fund manager. And trust me, one thing you need to do is, this session is not always going to come out here. Trust me, 100%. It's not always going to come out here. And by the end of this whole session that we take in our Forexlyfe hybrid course, right? When you're done with it, you will not just know how to trade, you will not just have psychological balance, you will have a polished investor-ready trading plan. That's one. You will have verified performance metrics to showcase your edge. That's 2. You will have the confidence to present your strategy to investors. That's 3. And number 4, you will have a custom template to trade lodging, to risk management, and reporting your trade. So, the funny thing about our Forexlyfe hybrid course is this, right? You need to be you need to understand that we are not just teaching you strategy. We care about your entire well-being as a trader, from technical to fundamental analysis to psychology to building yourself and growing for just being a trader to a fund manager. Now, I'm seeing a comment where somebody said it's a bit hard to be a position trader with a small amount. Now, I'll give you this story and a case study before I go. I'm going to end the session now. Right. So, there was a time we approached a couple of persons to bring, let's see your trading plan, right? Let's see your risk management plan. Let's see your trading plan, because in your trading plan, you have your risk management plan, right? And then there was a trader who funded his account, right, with $500 and was trading like that for 3 years. He had verifiable trading records. He had verifiable trading records. And then there was another trader who had $70,000 in his account, right? But by the time we asked him to show us verifiable trade, he said he had been trading for about 6 years. Okay, please, can you show us verifiable trading results? He gave us access to his MT4, I think investor's password, the back office printed it. And the truth is this, the person that was trading with $500 is consistently and a profitable trader than the guy that had $70,000 in his account. Right? But the difference is this: you people don't know, because the guy with the $70,000 has more money. So even if he blows that money, he can fund again and keep funding and keep funding. And he will keep showing you, oh, I'm funding again, I'm trading, I'm funding again. He will withdraw a bit profit, show you I'm funding again. But the guy with $500 did not have much. But because the guy with the $500, fortunately, is a Forexlyfe hybrid course student, right? Had consistency in his head and understood the basic principle of fundamental analysis, technical analysis, psychological upbringing, and then he also had the understanding of building an investable trading plan. So if you've got questions for me, you can reach out to any of our platforms. You can reach out to FX Prof on Instagram, Forexlyfe on Instagram. You can reach out, if you're a member of the Forexlyfe Telegram channel, you can reach out on any of our platforms. And then if you've got questions, I'll do well to answer all of these questions for you. And we have come to the end of this session tonight. And I'll take your questions in the group, in the platforms, on all our social media platforms, and we'll create content regarding your questions so that it can be out there for you to also listen to. Thank you so much for joining this session. I want to appreciate everybody, and I want to apologize for the break in transmission we had. We'll do better to make sure that the session goes smoothly in our subsequent sessions, right? Stay tuned. Keep your post notification on. If you've not subscribed to our channel, please subscribe so that you don't miss out any session that we are doing. Please subscribe, like, share. Share this to anybody you know that needs this. Okay? I'll see you guys in our next session. Do have a lovely and wonderful day ahead wherever you are. Thank you.